Eric Mwatha with Mwatha.com for March 11th, 2015. Take a look at the US markets here with about 20 minutes to go before the close. We are looking at the Dow and of course the other major averages down significantly for the day, about 1.5%. And let's take a look at some charts here in the US and some world market charts so we can get a feel for what is going on worldwide. So this is the Dow Daily Chart, and this is on March 6th, Friday. You can see we had a big point drop in the Dow because the RSI on the daily moved below 50. Now if I take a look also at what happened to the market on Monday, you can see we had another relatively big up day on Monday because the Dow moved back above 50 on its daily time frame. And now if you take a look at what the market is doing, which is today, of course, we are seeing another move in the market with the Dow down about 284 points as it moves back below 50. Yesterday I pointed out there was a line where the market was bouncing. It looked good on the daily, but now that line of support has been broken and the possibility is now increasing that we might see more downside. It is a possibility, of course, we don't know, but I'll share with you my suggestion here and my feeling that this could make a lot of sense. Number one, if we take a look at the weekly charts for the Dow, let's take a look at the weekly here. I guess go back a couple years. Excuse me here because I just decided to talk about this on the fly, so I wasn't as prepared. But anyway, on the weekly, what I wanted to show is on the Dow weekly, we made a higher high. Let me fix that. Higher high in price, but the RSI did not make a higher high. In fact, we did not move above 61.8 during this move here. And this can also be seen by the S&P. So S&P 500 on the weekly, we made a higher high, and yet we made a lower low, a lower high on the RSI, and the RSI did not move above 61.8, which is the worst type of negative divergence. So I think this could set up for a major drop in the market. Another consideration is if we take a look at, let's take a look at the Dow Monthly, and then we'll move on here. The Dow Monthly, and that's, I gotta fix this, so give me a second here, go back a couple years. And what we see that on the monthly for the Dow is we made a higher high in price here on the monthly, lower low in technicals, and the rejection here was at 69.10. That could become a major problem in this market, absolutely major. I want to share with you one more chart on the Dow, and it is this long-term monthly view going back to the 90s. What I want to sensitize you to is this line here. Now there have been two major drops in the market, of course in 2000, this phase here and also this crash phase there. Both instances began when the RSI dropped below 69.1 there, and even here. And there was also a break of a trend line in 2007, which was a major sell signal worldwide. And now we are looking at the possibility of this becoming a sell signal. So if the market breaks 69.10 like it's doing on the Dow, and if it also breaks this long-term trend line going back to 2009, we are looking at an increased possibility for a major drop in world markets. Now, something that is also concerning me personally is if we take a look at the Mexican market, So let's go to Mexico, and I'm gonna change this. So give me a moment here, let me fix the charts. I want to go and take a look at this chart here. I think is showing us what could happen to other markets over time, is because we are looking at this market, and I'm gonna have a link to a video that is gonna explain why. You can see this is moving to fresh monthly closing lows there. That could be a problem. We also see that the RSI could easily move below 38.2, which is where markets crash. So this could become a problem. All right, this break of that would be a major sell signal. We are looking at the MACDs. They've already given us a major sell signal also, below to 3-year lows, below zero, and also here below zero and below to 3-year lows. So the Mexican market looks like it is poised to crash. If we take a look at the Brazilian market, and we're going to use the Brazilian ETF so we can get real-time data. Let's get that right. And you can see here on the Brazilian ETF that tracks the Bovespa, we had already broken down to 3-year lows earlier. Actually doing it, I would say right now. 3-year lows move there. Also, we are already trading below 38.2 on the monthly RSI. This break below the previous monthly closing low is not gonna be friendly for the Brazilian market. We also see that the MACDs are also breaking down to 3-year lows here, which is very bearish, and also 3-year lows here, which is very bearish. So the possibility that world markets are turning around and headed lower is very high, and I think we need to be sensitized to the idea that we might have seen a major generational high. So we have to be very sensitive to that, especially for stocks that have had a massive move. We can't just let those gains disappear. Let's not forget that we had already seen the Russian market, and this is the ETF that tracks the Russian market in the US, RSX. We broke below that, which was 3-year lows, and we had this what seems like a crash type movement in a major market. This is what they call a crash, in my opinion. If we extend the same line, we come here to a level where we are showing resistance again, indicating that we might be making lower lows. And I also noticed that the instrument that tracks gold market in the US, the GLD, is also about to make a move to 3-year lows here. That break to 3-year lows could be catastrophic for gold, and if gold makes a 3-year low also, that will become a problem. So gold has not yet to break, but looks like it could do so very easily. Actually, if you take a look at silver, and I apologize for going into other markets, but if you take a look at silver, you can see that the silver market is also about to make fresh lows here. If it makes those fresh lows, also makes another 3-year move to RSI lows on the monthly, expect the silver market to crash. I want to show you one market, which is a crude oil, and I'm going to use the ETF that tracks crude oil, USO, and you can see that this one already crashed, and the crash became because the RSI already moved below 38.2. So that crash in crude oil here is because of the break to 3-year lows, also the break below 38.2 on the monthly RSI, and also the break of this MACD lines to 3-year lows. So the minimum requirements have been met, and so the market that follow the crude oil market, the energy market, have crashed early 2015. And so let's take a look at the Nifty from a monthly perspective. Keep in mind that we've been talking about this over the last couple of months. This line going back to the 2001 level here, we see that every time we break below that over the last couple of years, we've had a major drop in the Nifty. Also, this break back below that line led to a sizable drop on a monthly basis, and also we see that we've done the same thing here, moved below that line. That could be setting up for a drop. We had also mentioned that there was another line coming back to the break, to this break point somewhere there, and we know that if we drop below this line here, that could become a problem on a longer term basis. So is it broken? Not necessarily, but could it break? I think eventually we might look back and say that yes, somewhere around here was a major generational high. Keep in mind that we had been discussing that even though we are not acting on it yet, but the backdrop is there for a major drop because of this declining RSI strength, while markets were making new weekly closing highs. This setup could be a problem, but I've also been insisting that as long as the market is, let's see here, as long as the market is holding above the previous entry level on a breakout level, so there was a recent breakout here on the RSI, as long as the market is holding above that, and as long as the market is holding this line, it should be relatively okay. But if it breaks those two lines, that could become a major problem. And take a look at the daily. And what we see on the daily is that if we go back to the level where the market had began this nice move here, and we haven't been back to those levels since, that nice move began when the RSI moved above that line, which was this breakout, and a simple straight line could give us some understanding into where markets can bounce. So if this can hold like it's been doing when the market has been coming back with uniform activity and holding here, and just to show you some examples on the major drops, even this drop here was once the market recaptured that, and recently we've been going above this line and back above it. So even here, so if the market can bounce on this line, that's good. The more we trade underneath this line, that's not good. And also there's a short-term break on the support line there, and this connects this low, that low, and that low. That line has broken, but this is the line that needs to be held. If we start trading underneath this line, and more so if we trade underneath this line here, somewhere around there, if we trade underneath those two lines, the main one being this one, market could still be under trouble. Also, if the MACDs break here, then we start looking at the possibility for a market to be coming off the lows. As I record the video here, the US market is now declining into the lows for the day, down about 300. And so my thinking is that there's something going on in world markets and major commodities that we have to respect a major pullback worldwide. And probably, and it's a possibility, that we are looking at highs that we will not see for another couple of months, maybe even years. So we have to be sensitive to the idea that this market could be broken. If we take a look at the hourly, and you can see that this is where it needed to bounce. It needs to recapture that line as soon as possible, otherwise this is becoming sell signal. And coming off this low, the entry level was here, and so a simple straight line would tell us where it needs to be back above this line with uniform activity. If it cannot recapture this line with uniform activity, then we're in a different market that more than likely is going to be poised to go lower. Eric Mwathe, good luck, peace, and blessings. Woo!